Chilling.
How's it going?
Good, man. Is it
Cool.
just you and I?
Yeah, I've added some people. It's gonna grow over time, and then I just post on YouTube.
Okay, got it, got it.
Yeah, yeah.
Somebody sock you in your nose? What happened?
Yeah, man. The other guy looks way worse. But I got hit really bad. Crazy. Um, but yeah, today's day two. So welcome, welcome, welcome. How's it going for you, bro?
Good, man. Good. I guess I missed day one.
Yeah. That one was okay. That one was okay. Day two, day three, every day is gonna get better and better. Um, what is the low end theory?
Tribe Called Quest?
Oh yeah, I should know that. I don't.
Well, now you know.
Yeah, it's before my time. Cool. So
Back when
tell me
times were
about
better.
what did you say?
So back when times were better.
Back on time. Facts, bro. Facts. Have you ever traded before? Could you remind
Yeah, yeah,
me?
I did. Hey, give me 1 second, man. I forgot something. Hold on. Give me 1 sec here. All right, sorry about that. Yeah, I have. I was working with another guy and who does quite well with it, and he had I would consider a medium-sized following in terms of students and whatnot, and he knew what he was doing, or at least as far as I could tell, and people seemed to be happy for the most part with their results. But I just didn't particularly like him as a person all that much. And it's hard for me to learn from somebody that I don't like.
Yeah,
If I can't see myself hanging out with that person,
yeah,
then it's hard for me to like learn from them, because all I'm thinking about is like, man, I do not like this guy's personality at all.
yeah,
And I didn't, to me, I didn't find him to be a particularly effective communicator in teaching what he
yeah.
was teaching. You know what I'm saying? Maybe that was just me not just understanding or whatever, but I just found it to be uh, like you would ask him something and he would act like you were stupid for asking it. And I'm like, bro, I don't know what I'm doing. Like, help me out here, you
Yeah.
know? And yeah, so anyway, but I did make some trades and things like that. Um, Net negative in terms of what you know, like one day I'd make like $15 and the next day I would lose $20. And the next day I would make $3. The next day I would lose $4. You know what I mean? It was kind of like
Across the all traders across the world, bro, you're doing pretty good.
that.
People have lost millions,
Oh, I
bro.
know. Yeah, you know what, Jeff, um, in the program,
Which one?
Autobert, older guy.
He's from Canada?
No, no, he's from Oklahoma, actually.
Really? No, I haven't met him yet.
Yeah, he trades, and he's like, yeah, man, like the last 10 days I made $400,000. And then the next time I talked to him, yeah, I lost like 1.2 million. And the next day, yeah, I made it all back. And I believe him.
Yeah,
I don't think he's
no, that's how it works, bro.
inflating numbers. Like
Yeah,
he's very, very, very well off. So, but anyway,
that's exactly how it works.
yeah.
He's he still in the program?
Yeah. Mhm.
Nice,
He
nice,
posts from time to time on school a few times
nice.
a week.
Yeah, I'm about to be more active in school too. So cool. So let me tell you about this. So you have never done futures before, right?
What's that?
You have never done futures before, right?
Futures? Is that what you
Yeah.
said?
Can you
No.
see my screen?
Yes.
Do you know what's going on here or not really?
Can you? Is there any way you could blow it up a little bit?
Um, I don't think so,
Okay.
but I
Because
can
it's hard
try.
for me to see. Like I can see the chart and everything. It's just
Is this any better?
yeah, I guess. except for that pop up. But yeah. So, I mean, the long and short, do I know what's going on? I
All right.
mean, a
So
little
so
bit, I
so
guess.
then I'm gonna break everything down to you, right?
Okay. All right.
Let me remove this so it's clear and easy, but I might need to put it back on if it hits this line again. So move this off. This is you see where it says MNQ
No.
at the top left, all the way up here where my mouse is.
Oh, yeah. Yeah. It's super tiny,
So
but yeah.
yeah, so that just bear with me for the beginning until I can give you your own screen. This is the symbol we trade. This is called the NASDAQ.
Oh, okay. So you're doing, all right. You're doing NASDAQ. Okay. Gotcha.
Yeah. This is called the NASDAQ. So this is like the tech sector,
Hmm.
right?
Gotcha.
So
Okay.
this is an exact representation of like what's going on in the sum up of most of the biggest blue chip American companies.
Okay. Let me stop you real fast.
Hmm.
So, first thing, so the is Future the platform that you're trading on? Is that what that is?
Um, so futures is the type of um I guess you could say like market we're in. So there's there's brokerage broker no there's I can't say it like that. There's Forex, right? There's a Forex
Yeah.
market,
Hmm.
there's a crypto market, and there's a stock market.
Yeah.
Right now we're doing the stock market, but instead of actual stocks we're
Hmm.
trading futures. So futures is like a representation is an estimate of what price prediction could be in the future. So
Okay.
that's why they say we're trading that's why they're trading we're speculative trading because it's not actually the price, it's just speculation.
Okay.
There's a long history of like how this came about with farmers and all that stuff. You can look into that like whenever. But basically this is a representation of the overall health of all of the most popular American tech companies.
Okay.
So, right,
So
go ahead.
okay, when I'm saying like I don't know how to get started, I
Hmm.
don't know how to get what you're trading on.
Oh no, yeah, yeah. We're gonna get there. I just want you to know
Okay,
what
okay,
this
okay.
is before I
Gotcha.
like say, hey, this is how you start. 'Cause I know you're already ready to start. Yeah, and then when we got on a call, I'll like break it down more specifically, but I want to go general so you have this knowledge and then
Yeah,
everybody
okay.
who
I
watches
got you.
gets
I
this.
got you. All right.
So so yeah, so this is the NASDAQ. This is what we trade. This indicator works best on the NASDAQ. So let me take this off for a second so the screen looks really bare. So basically this is like a regular screen. Every time you come into TradingView, everybody gets access to this, what you see, nothing else.
Mhm.
And this is just you see what this tick is right here?
Are you on hourly
This is the 1 minute.
1 minute? Got you. Okay.
Yeah, you see this tick right here?
Yeah.
This is what's called price act. This is what's called price. This is exactly what the price is of the symbol right now, right? And it moves every single second. Every second is like another tick in another direction.
When you say tick, are you talking about like the candles, like the wicks and all that?
When I say tick, it's the movement of the wick of the
I
candles.
got you. Got you.
Exactly,
Okay.
exactly.
All right.
So when we first started, we were like
Yeah.
right here, and then we
Hmm.
traded sideways, and then we dropped down, and then we came
Uh-huh.
back up. So that's the price
Right.
action that played out so far.
Okay.
Um, okay, cool. So, and then you already know about the different time frames, one
Yeah.
minute, 5 minute, 10 minute, all that
Hmm.
stuff.
Yep.
All right, cool. So now I'm gonna get into the indicator. So this is the indicator.
Okay.
This is basically what tells you what to do from like having a blank screen to having like a screen of like, okay, this is what I do, this is what I don't do. So this indicator starts at 9:45.
9:45 in the morning.
Yes, every day 9:45 in the morning.
Okay.
And it it starts at that time because right, you see this right here in the morning there tends to be this is what's called chop. This is how people blow their accounts, get upset. This is just to get people like thrown off their psychology so the market makers can make money and the everyday traders can lose.
So you think that that's intentional?
That is intentional.
Okay. Like for sure is that conspiracy theory stuff.
It's proven because people need to lose because this is a zero-sum game.
Uh-huh.
So somebody needs to lose so that somebody could win.
I got you.
The
Okay.
best way to look at the market is like the casino. Like
Yep.
it's a conspiracy theory that the casinos have all these edges, but like when you talk to somebody that's like in it, they tell you and they prove it, and it's because it's either
Hmm.
I make all my money on blackjack or the casino makes all their money on blackjack, right?
Right.
It's a
Yeah, I get you.
business.
Okay.
So this is proven to do so, and you'll see every time when you start trading with this and everything like that, you start seeing that there's always chop. So this indicator is good because it doesn't even start a trade until the chop's over. The chop stopped at 9:45, and then you can see it got we got a sell signal. I got in right here, and I
Hmm.
sold right here.
Okay.
So I'm already profitable before I even came into the call.
How are you profitable though? I don't understand that because it went down. Like if you bought up there and it sold down there, how did you make a profit? It seemed like you
because
were at a
because
loss.
I didn't buy here. You see, it says sell.
Yeah.
So I actually sold there because I got a sell side order. So I'm
Okay.
explaining to you exactly what that means. So this is a very simple indicator to understand
Okay.
because there's only two things you can do. You can
Buy
only
and sell.
buy, you can see, yeah, exactly. And you
Okay.
buy when you go above this line,
Uh-huh.
and then you sell when you close above this line.
All right. I'm a little confused. So if unless unless I'm just not reading the chart correctly or something like that, because what I'm hearing is that you're buying when it's up high and you're selling when it's down low. That's what based on what you're pointing on the chart.
Exactly. And you're probably like not getting it because you always heard sell buy low, sell high. That's what you heard, right?
Yeah, if I buy something for 1,000, I sell it for 500. I lost $500.
Right. So let me show you something. And you just got to keep in mind, like, because we're in a program, right? And we sell to guys. Like, the worst thing for our guys to do is come in with like the YouTube advice, right? So,
Uh huh.
so like buy low, sell high is YouTube advice because it's generic. It's like, yeah, of course I gotta buy low, sell high. So like just for a second, like erase that thinking, right?
Okay.
Um, the reason why what we're doing is correct is because once we sell,
Hmm.
like I'll show you exactly what happened actually right here. So I sold here
Uh huh.
because we were in range for it to go lower. So I sold here and I got out at a lower price, so I made money.
I can't wrap my head around that.
Okay, cool. So let me do it with your side because buying is a lot easier for people. You see it says buy right here.
Uh, no, I don't actually. Oh, that in that little green box.
Yeah, you see this green box that said buy.
Yeah.
Let me show you something now. So let me get my pen out, break this down so it makes sense to you. Where is
There's
my
no way that you can blow that screen up, huh? I mean,
um
it's like super hard to see when you're pointing something out.
really?
Kind of. It's super tiny.
Are you on your phone or your laptop?
I'm on my laptop. If I was on my phone, I wouldn't be able to see shit.
Mm, um, give me a second because I actually low flow stat is clear for beers. I actually might get in on this. Um, you see how we're about a you see where it says 23 seconds over here on the right side?
No, I mean I see where you're pointing at, but I can't. Those numbers are so tiny, man. I can't see them.
Damn, I don't know, bro. Can you zoom in on your side of the screen? When somebody else
Maybe.
hops in, I'll be able to see if it's just you or if it's me, but it's pretty a standard
I don't
view.
see how. I don't think I can. I don't know. I mean, hold on. Let me try this. No, that ain't it. Yeah, I don't think that I can. No, that ain't good.
Let me do
Well,
this.
hold on. Let me try this actually, just for.
Jiggles.
Nah, no, that didn't work. Here, I'll just try to move this closer to me.
Yeah, because what I'm about to show you
Okay,
is
I can see it a little bit. I've got the I'm like got my head rested on the keyboard practically. Okay.
nice. All right, so you see this green line right here?
Yeah.
All right, let me show you something. You see where it says buy over here on this left side?
Yeah.
Okay, cool. So once, let me get my drawing tool out. So you see this candle right here, this green candle right here?
Yeah.
You see how like that wick is closed? Like you see like it's the old candle and like right here is the new candle?
Yeah. hmm
That means that this old candle is closed. So right now, this green candle closed above this red line.
Okay. All
Got
right.
that?
hmm
Okay. So now let's walk through an example. Let's say an hour goes by, we go from this way to that way to this way to that way, and then we shoot up and then
hmm
we close right there. And then the next candle starts right here.
Okay.
What's going to happen in that case is this buy signal is going to come up right here and it's going to say, get in the market, Daquan, and you're going to buy. And I'm going to say, okay, I'm going to click this button right here that says buy,
hmm
and then I'm going to get in on four orders,
What do you mean by four orders?
four units, or four, what they're actually called is four contracts.
Okay.
So I'm going to get in on four contracts. And then you see
Is
where
that man? Hold on. Is that mandatory, or can you do one or 10
I
or
could do any
1,000?
number. Exactly. I could do any number. I feel fit. But for my
Okay.
exact account size, I'm going to do four.
Okay. Gotcha.
Or we could do one, whichever. So I get in on a contract. Boom. Now I'm in the market.
hmm
Now I bought here, and I'm going to sell higher.
hmm
So I'm going to take profits higher. So they say buy low, sell high, right? Even if you want to use that terminology,
hmm
I'm buying here and then I'm selling higher.
Yeah.
So
Okay. I
this is
understand that.
considered a low.
hmm
But now because you're going to see this happen like right now in front of you too, um, the market is going to range a lot in here, and it's not until we get out of this zone officially where we can actually buy out to make some money because we have to make money off of range, which means that it has to go from this price all the way to that price. We can't really make money in this little range because it's not profitable.
Okay.
'Cause we have to get in out, get it. That's annoying. You want to go from like let's say I knew what the market was gonna do and I got in here and I
hmm
sold all the way up here.
Yeah.
That's good money.
Sure.
It's real good money. But like if we're just gonna like buy in here, it's not really gonna be worth it for us.
Why? Because it's like kind of, even though it's going up, we're talking about what, like a nickel or something. You know what I mean? Like a very
Basically,
insignificant amount of money.
essentially,
Yeah.
exactly.
Gotcha. All right. Okay.
Um, so that's basically the difference. Um,
So
Go ahead.
let me ask you this. So, okay. So if the indicator is telling you to buy or sell, right? Is that predicated on, like, is that customized to you? Or is that telling everybody who happens to be on here that, okay, everybody buy now, everybody sell now? Or is it just you?
Everybody that has access to this indicator gets the same information.
Okay. All right. So how long are you typically sitting on something? Well, because this is what I'm getting at. So my hunch would be is that the buy and sell is going to come up at multiple times throughout the course of the day, right? I would think.
Um, Not technically.
Okay.
It may, but that's not what you want. Like we're here for the market to let me show you something. Because I'm learning that like if I could just show you, you can get the answer a lot quicker. Um, 1 day, 5 day. All right. You see this?
Mm-hmm.
Um, I want to capture this long giant range.
Mm-hmm.
So if it just does this little bullshit right here, that's
Yeah.
annoying. Like I don't want that. So we're waiting for like so like I might get like a sell signal like right here to go here,
Hmm.
and then I might get a buy signal to go here all the way up there.
Yeah.
This
Okay.
range normally is like a whole like 2 hours in the market of profit. And then once that occurs, you get out, you're done for the day. So you might get like 2 to 3 like signals for the day, but it's
Okay.
not going to be like multiple. You might get like 2 to 3 because one might be like a little profit target, like I did right before it came on.
Yeah.
What we're wanting is like the actual like move to either side, so we can make profit for the day and get and be done.
Okay. So the reason I asked that is because, like, okay, so um if everybody has access to the same information, but it just depends on where you're, like, for instance, somebody in California, 9:45 for them is going, or 9:45 for us is going to be 6:45 for them, right? So they might not jump on till later in the day, right? And so now, if it's telling everybody at the same time to buy and sell, what if you like if you just bought something and then it's telling you, I guess a better question would be, it's on average, how long is it, how much of a span of time typically, I'm sure there's, outliers, but how long of a time between buy and sell is a typical amount of time?
Okay. Um, that's not up to you or me. It ranges. So
Well, I realize that, but
typical, yeah, yeah.
what's
I'm gonna show.
the
I'm gonna show you.
typical?
I'm gonna show you. I'm gonna show you.
Okay.
So
Okay.
remember when I said I'm gonna get in on 4 contracts?
Mm-hmm.
This is literally what happened right before you showed up. Like
Okay.
boom. I got a sell order right here.
Yeah.
And I was told that the market's gonna be choppy today. So I only did 2 contracts, but for the conversation, I'm gonna say I did four.
Okay.
Um, I got a sell order right here. I got in on 4 contracts. Market decided to go all the way down to here.
Yeah.
So in the court, so you can see right here, this was 9:43.
Yeah.
At this last wick down here, it was 10 p.m. Um, so that was 17 minutes. And I
Okay.
got price target 1, 2, and 3 hit. So in 17 minutes, I got to 3 price targets. Technically, so like and with this example, this is like I made 163 because I sold right here. But if I held on a little bit longer, that'd be about $400.
Okay.
So what so four is actually it didn't hit four. It stopped right before four. Four is actually the average. Like yesterday we ran and we hit 10, right? So sometimes it
Mm-hmm.
goes to 10. 10 yesterday took 2 hours. Four today took 15 minutes. I would say that's the answer to your question. It
Okay.
ranges from 15 to 2 hours.
All right. Got you. Got you. Okay.
Yeah.
I still don't understand buying way up there and how you made money selling as the price of that stock or whatever is going down.
Okay, great. So do you understand what the concept of shorting is?
No.
That's why. So let me explain that to you and then let me know if it makes sense after.
Okay.
Um, Shorting is making the difference. So if it's kind of how loans work too. Um, if I give you 1,000 pieces of silver
Mm-hmm.
and they're valued at $1,
Okay. So $1,000 worth of silver.
and a month from today, I say you gotta sell me back that silver at whatever the price is for that piece of silver.
Mm-hmm.
A month from today, there's a crash and silver is now valued at 50 cents.
Okay.
You give me back all the silver. You pay me back for the silver, right? And because it's valued at 50 cents, you're not paying me you're not paying me $1,000. You're paying me what is valued at, which is 500.
Okay.
Let me add in one word so it makes more sense. Let's say I give you 1,000 pieces of silver. You buy 1,000. Let's say we have a contract for you to buy 1,000 pieces of silver from me.
Okay. So here's $1,000. You give me
No,
the
no, no,
silver.
no. So this is the difference. Is we have a contract. We have an agreement. We don't have an actual $1,000 on the table yet. So this is why it's gonna make more sense.
Okay.
Let's say we have a gentleman's agreement that
Hmm.
a month from today, no matter what happens, you're going to buy silver from me in 1,000 pieces.
Okay.
We have a
Got
promise.
you.
We have a gentleman's agreement. You're gonna do this in a month from today.
Yeah. Got you.
We don't know what the price is gonna be. It could be up, it could be down. But it's say, hey Dale, $1,000, 1,000 pieces of silver, you're gonna buy from me. Cool.
Hmm.
A month from now, the price of silver goes down. Um, and you have like the thousand on deposit, or you have 1,000 in mind to give it to me. Now you're gonna pay me the $1,000. Um, you're going to pay me the. It's still not gonna make sense that way to you. Yeah, yeah, yeah. I'm getting to the end. I'm like, yeah, it's still not gonna make sense. Um, how can I? Let me explain buying. Do you understand buying? Is this the same thing in reverse? Like you understand how buying works, right?
Well, I mean, I, you put an order in for however much you want to spend on a particular thing, whether it's a stock or crypto or precious metals, whatever.
Okay. Actually, I forgot how to sell it to you. You remember Jeff? That was doing the fix and flipping stuff,
Yeah.
and boom! This is the best example in the world. Wow, iPhones. It's 2015, you buy the newest iPhone, right?
Okay. Yeah.
iPhone 12 or whatever.
Hmm.
Um, you buy it for $1,000 and then you wait over time and it depreciated. Now you have to find a buyer for the phone. The phone actually has no actual finite piece of value. It moves like the market.
Hmm.
So but you hold on to this iPhone 12 for 5 years and now it's valued at $500.
Okay.
So for you to get your money back, you have to sell it to a buyer. The only buyer is gonna give you $500. So 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 so
Right.
so so that's it. Like let's say you bought an iPhone. The way shorting works is let's say you spend $1,000 on an iPhone,
Yeah.
right? And then a year goes by, a month goes by, and the va iPhone is now valued by the market of only $500.
Okay.
But you have to sell it. You want to get your money back now, right? Because
But
it's
you're
like
not getting all your money back. You're getting $500.
because of what the market's giving you for that price.
Right. But if I spent $1,000 on it and I sell it for 500, I've lost $500.
Yeah, that's still how the buying works. So I guess I have to explain how leverage works for you to understand how selling works. Um, selling works against the market. So you you know what margin is?
I mean, I I know I guess the dictionary definition of it.
All right, so let's say a Tesla stock is $100,
Hmm.
but you don't own like you don't like the way it works is you would that's still not gonna make sense either. I don't know how to explain it to you, bro.
I cannot wrap my head around that. If I spend $1,000 on something and sell it for $500, I didn't make money. I lost money.
Yeah, but it's because you're like you're holding the money.
The only way I can reconcile that in my head is if, like your iPhone example, if you sell, I buy an iPhone for $1,000. It lowers to $500, but the iPhone has now turned into three iPhones. And so I sell three iPhones and I've made 1,500 and I've made $500. That's the only way that I can reconcile that. Like as if it's split.
No, it more works like you're taking like a bundle of units of this thing,
Yeah.
and then if it goes lower, the person that allow you to like take the bundle of that price has to buy it back at that same price. So you keep the difference. That's basically like what I'm trying to explain to you with an example. So like I took ownership at this price of this stock because you're when you sell, the reason why it's confusing is because you're still buying something, right? Like you're still taking ownership. But the difference is the person has to buy back. And I think I kept saying at a lower price, but the person has to buy back at the same price you sold at. So you're keeping the difference.
Oh, okay. Hold on. I think I'm starting to get it. So regardless of what the market is saying that the price has dipped to, they still have to buy it back at a certain price, not the
Yeah.
price that it's being represented as to what it's worth.
Yeah, that's why you have to understand margin because margin, yeah, margin explains that. Yeah, because it's like how can I buy it? Exact, yes, to save the time. Yeah, that's
Okay.
exactly what
All
you
right.
do.
But the one thing I'm still not understanding is if I buy something for $1,000, right? And we make an agreement, regardless of whatever this thing is worth in a year, you have to buy it back from me for $1,000,
And you
right?
keep the yeah.
Now, but at that point, I'm just breaking even. If you're buying it back at the price that you sold it for, then it brings everything back to what it
Oh no, no
was.
well, that's if you're shorting. If you're buying, because shorting has an extra step that is distinguished short. Because you're asking like what's happening like behind like the mirror, but shorting has an extra step. Buying is very simple. Um, If you bought something at $1,000 and the price goes up to 5,000, the market's
Mm-hmm.
buying it back from you at market value. At like end of story. So if you bought it at like let's say
Oh, okay. Hold on. Let me ask you this. I think I'm getting it. So we make an agreement that you're going to buy this bottle of water for $100, right? I'm going to buy back that bottle of water in a month for $100. Okay. Now, if the price, if the value of this bottle of water dips to however low it goes, then bottom line is I'm buying it back for $100, regardless of what it's worth. But if it's worth more, then I have to pay you whatever an additional it was that went up. Is that kind of it?
yes, yeah, you
Okay.
got to pay it back, and that's what's called you paying back extra is what's considered a margin call. You got to pay the
Okay.
margin, the marginal difference.
But if that's the case, how does anybody lose money? Because if they have to buy it back at what you bought it for,
Because
then
because so if you're selling, you're losing money because it's going higher than the price you bought it for. So you got to cover the margin. That's how you lose money if you sell. The way you
okay,
before I go on, does that make sense? So
not
so
really.
if we bought this iPhone and um if I bought this iPhone at $1,000 and
Mm-hmm.
now for some reason iPhones have a shortage across the world, the value of this goes up to 2,000. I'm selling it back to the market. So now that I spent my 1,000, I'm getting $2,000. So
Right. So you
buying
made a
is
thousand
simple enough.
dollars.
Right. But now if I'm shorting, it's shorting is the reason why you're just not seeing this part, but the reason why shorting is just one step extra is because to short you have to use leverage. So yeah, you kind of are like you're basically using money that you don't have to get this thing, right?
Mm-hmm.
And then you're hoping that this thing is going to be valued at less so that they can pay you um so that they can pay you how can like you're not selling it. You're selling it back to the market and they're paying you the it's like a margin call on their side, basically. It's like they're paying you the interest of it going down.
Okay.
Give me 1 second. Let me do this for you. It's gonna cover this all up. Explain. All right, boom. All right. So this is gonna break it down simpler. Imagine you have a Pokemon card that's worth $100.
Okay.
You borrow the card from your friend and promise to give it back later.
Hmm.
Then immediately sell the card to someone else for $100.
Okay.
Now you're holding $100, but you still owe the friend the same card.
Okay.
What you're hoping will happen is a week later, the card's price will drop to $60. You buy the same card again for the $60 and give it back to your friend. You keep the $40 profit.
Ah, that's a great example. Now I get it. Okay. All right. All right. All
Yeah,
right.
yeah.
Okay. Now, but so
The
you
part,
would
the part I kept
lose
messing up in
money.
my example is two different people. It's not the same person. That's what I kept messing up.
Okay. So same example. All right. You have a Pokemon that's worth $100. I you let me hang on to it. Then I sell it to Jared for yeah, I sell it to Jared for $100. So now I've got the $100 bill. The price goes up to 150 for this thing, but I still owe you that card. So I got to come $50 out of pocket to go buy you another one to so it's the same thing except
Margin call, and that's why you lose money.
well, okay, now it makes sense. Okay.
Yeah,
Now I get it. All
yeah.
right. Okay, I get it now.
Cool. That was worth it. Yeah, it was. Um, nice. So what's happened so far? So okay, so do you see how I made money right here when I was saying
Yeah, yes, I do. So you're selling it back to the market at a lower price than
what I got it for?
right, and you're keeping the difference.
Yeah,
I get it.
I'm
Okay.
keeping the difference.
All
Exactly.
right. Now I understand that. Okay.
Yeah. So that's why you can sell low and then sell lower or get out lower, basically.
Hmm.
Yeah, but just
So when you're selling, you're really technically, hold on, let me slow down here. So when you're selling, you're technically buying in a way.
yeah, to get out. Yes.
Okay. All right. Okay.
Or they're buying from me, to be more accurate. Yeah.
Yeah. Okay. Okay. All right. So, okay. So that level 4 down there at the bottom.
Hmm.
Okay. So let me just see if I let me talk my way through this and tell me if I got it. Okay. So we'll say that you bought $100. You got one contract. You bought it for $100. Okay. And I know this is probably gonna be overly simplistic, but fuck it. So you bought it for $100. The value of that has increased to $400. So you sold it, and now you've made a $300 profit.
From 400?
Yeah, because you bought it initially at 100, so you made a $300 profit.
Yes, because I bought it at 100 exactly.
Okay, all right, good. All right, I get it.
Yeah, exactly how
Okay,
buying works. Um, Let me see what this says. Give me a sec. I gotta see what the VIX is. Um, is it at 16 or 17?
I think Forex is what I was on before with trading.
Okay. Yeah, Forex is good. I started with crypto, surprisingly enough.
Is it?
Um,
Is that
yeah,
surprising?
'cause nobody starts with crypto. Crypto is like I started trading crypto in like 2017. People were like in the most volatile thing ever, which is futures. It was very easy to make money back then. Um, yeah. All right, I think we're live. Let's get in. All right, so we close below this line,
Hmm.
which means that I'm getting on a trade. But today the market is deciding to be really choppy. So I'm only going in on 1 to 2 contracts. Just now I did two.
What prompted, like, okay, so what is this? Uh, what is it right now that you're actually trading?
The Nasdaq.
Right, but just the overall Nasdaq. It's not one specific company, or it's just
So
the overall.
so the Nasdaq is a representation of the sum up of the top, I think 100 companies. So it's an
Okay,
index of
right.
a
Okay,
hundred
so if
tech companies.
right, got you. So when you're buying, we'll say, um, like you just I seen you just bought two,
Yes.
right? At what price?
Right here, I got in at 255 um 537.
So what does that mean?
At that exact price, I that's when I said, "Hey, give me that Pokemon card."
All right, so $25. You didn't spend $25,000.
Okay, cool. So this is introducing the concept of leverage. So I'm not gonna get into contracts because that's gonna turn to a whole lesson. But I have a contract for um m- two representations of the Nasdaq futures.
Okay,
So remember the Pokemon card?
yeah,
That's a unit, right?
right,
So now that Nasdaq 100 index,
hmm,
I have 2 units
right,
of that.
gotcha.
Yeah.
Okay, all right,
So the
but
more units, the more money there's
right,
being.
but what I my question is what is one unit worth? What did you buy it at?
Um, let me get the price for you. Um, there it is, 2534.
So $25.34.
25,534 is the price of one index,
So
right?
you just invested $50,000.
Yeah, 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 exactly. Yeah. The reason why it's like, whoa, like, is that in your account? So let me show you something. Um, because you're asking something that's like not really um you know how Forex works when and like how lot sizes are. You ever watch that video?
All right, hold on. I think I'm just starting to come back to me a little bit. So you're buying a part of the $25,000. You're
Yeah,
not
it's
buying.
leverage. Yes, it's leverage. Yes, because of like leverage and yeah, exactly.
So my question is, what out of your account, your bank account, did you invest when you just bought those two?
So let me explain something, but just
Okay.
forget your question because what I'm going to explain is going to give you more information and
Hmm.
answer your question.
Okay.
This is futures, and people don't trade futures because, as you're figuring out, it's very expensive to get into futures,
Okay.
right? But so there's this industry within the stock within the trading industry that's come out that's called prop firms.
Okay.
So what a prop firm does is saying, "Hey traders, we know that you're good, but we know a lot of people don't have starting capital, so we're going to give you this prop firm which means you pay us and we give you this amount of simulated funds. So this account has $150,000 of simulated funds.
Okay.
So um, For this account, I paid $500 for a representation of $150,000.
I see.
So the only catch is though, and the way it works is you have to make 10% profit before you lose 6% of the account.
Okay.
So now this $150,000, I want to make 15,000 before I lose 6,000. And I paid $500 for this account.
Hmm.
Um, in the event I lose $6,000 of the simulated funds, the account's blown, I can't trade anymore. I have to get another account.
I see. Because they want to
And
back winners, obviously.
exactly.
That's how they're
And
making their money. They're betting on you, basically.
sure, yeah, yeah, yeah. If I lose, then I have to keep coming back.
Okay.
It's like the exactly. Yes, yes.
All right.
Um, and then for
Okay.
me to make money, once I make 10% of the account, I get to keep 90% of the profit made.
Okay.
So 10%, so the goal is to make 10%. 10% of this account is what number?
10% of 150 would be, well, 15.
15,000. And then I
Uh-huh.
get to keep 90% of that.
Right. So, okay.
So
Gotcha.
essentially, I'm betting. So what my
You
spend
come away
in,
with 13.5.
yes.
Okay.
So what my spend in versus like risk, what's my risk to reward is $500 to a few $1,000s, basically, like
Hmm.
4 or 5 figures.
So
So
if you lose $6,000, are they pinging you like, well, you spent your 500 bucks? Like, it
that's
is
all I
what it
could
is.
lose. For all I could lose is 500.
Right. Okay. But I mean, you functionally lose that. Like, it just, that's it. It's a wrap.
The
It's gone.
500?
Yeah.
Yeah, that's what I spent.
Because you did
Yeah,
that up front, correct?
yeah, and there's
Right.
$50
Okay.
accounts, but like my account, I spent 500, but it's $50
Yeah.
accounts.
I see. I
Yeah,
understand.
yeah, yeah. You
I
can
get
get
it.
a you can get a $50 account for and get a $50,000 for that.
I see. Okay.
Yeah.
Now, can you, over the course of time, like, we'll just say that you're killing it over the course of time, can you bump that number up? Can you say like, okay, let me drop another 500 or 5,000 even? I have now a million and a half that I can
Yeah.
work with. Okay.
Yeah, you can. That's what's called stacking accounts.
Okay.
And you can even connect your accounts up where once you place a trade like in this account, it copies for all the accounts.
Okay. All right.
Exactly. That's a good question.
Now, okay. Now this is piggybacking off of that. So if it's not one company that it's just the market, it's overall, right? It's not, if you're buying, um if you're buying into the Nasdaq, and we'll just say, okay, so you just put $50,000 in, okay. Well, who's that $50,000 going to? Because the companies are selling their stocks for shares of their company. But if it's
So
going to the Nasdaq, who's getting that
So,
fifty
so,
thousand
so it's not going to the Nasdaq. That's a great question. It's going through the broker. The Nasdaq is just the medium, the tool of exchange.
Okay,
So
got
like
you.
instead of gold or copper, it's just
Right.
the
No, I
representation
get
of the
that.
Nasdaq. So who is
But
it going to?
yeah,
It's going through the broker. And the way it used to work is like Dale wants $500 worth of Pokemon cards. Ashley wants $500 Pokemon cards, trade. Like used to be a person manually doing it.
yeah.
Now it's a system that just takes all these orders and trades simultaneously all at once. All on boom, 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 boom,
So
boom.
the
It just
broker,
goes
the
through the
broker is
broker
basically deciding who that money is going to, for like,
for that exact same price. Yes.
all right, and trying to determine, okay, they're getting 50K over here. This company, if they get 50K, they're going to do something with it. Versus company A, B, C, and D over here, they're going to blow this money. So let me just back this over here.
There's no thinking. It's just you want to buy for $100, 100. bought, sold. You want to buy for $200, 100, 200, bought, sold. It's just seamless. There's no,
All right.
it's like when you go to the store and you make a transaction. Like you're not like there's just money for money, money for money exchange, money exchange. That's all that's happening.
Okay. All
Yeah.
right.
Um, I can actually let me see. Mm, I could I could show you this. Um, this probably would be good for everybody to know too. So I'm gonna show you what's called an order block. So you can like literally see what it looks like. You see my screen?
Yeah.
BTC futures. Da, da, da. All right, cool. Uh, oops. Okay. Now, where is the order block? Mm. Oh, here it is. All right, cool. So you see this? These numbers right?
Yes.
This is the actual order block. So right now, like this is the price of Bitcoin,
Mm-hmm.
and these are the units of Bitcoin being sold every second. Like this is so much we can't even fathom.
Yeah, it's incalculable.
Yeah, like $75,000 of Bitcoin is like an order was put in for it to be bought at this price.
Got you.
121, 65,000. Then people are trying to sell it. And then it goes even higher, right? Like there's even more. Like people are buying from people are trying to sell at 100,000, people are putting orders at 3,000. Like this goes like it's unfathomable the prices that are here.
Yeah.
So yeah, that this is like literally if you want to see what the market looks like, this is what it looks like. But it's not really needed for you to know, but you're just asking,
Yeah.
so I'm telling you.
Yeah. I got you.
So the same thing that's happening for the Nasdaq. Um, but anyway, I made some more money just now, and I'm trying. The point of this, because you're asking complicated questions. The point is just for me to break down and show how easy this is. Like, it's like
Here's
what
that monkey
happens if
wrench. Go on in.
Trump
Go on in
says?
there.
So let me get back to it. I made some money and I didn't get to explain how. So I don't know if you saw me when I hit click sell, but it went back
I did
down.
not.
Yeah. So and for everybody watching, it's gonna be in the replay. But what occurred here is actually I don't see the sell order, but whatever. You see where it says sell?
Mm-hmm.
Another one was supposed to pop up here, but it actually didn't. And you see how like remember what I said what a candle closing looks like?
What type of closing?
Like what a candle close, like the
Yeah,
end.
yeah, yeah, yeah. Mm-hmm.
So right here, this you see this green thing right here? This red
Yeah.
one indicated that we closed.
Okay.
And you see this like green 42, $43?
Mm-hmm.
That's the fluctuating current profit,
Okay.
right? Um, so right now we're still in the trade and it's coming back up to my entry.
I see.
But I sold here. It went all the way down to profit two. Oops, hold on. Um, yeah, whatever. It went all the way down to profit two, and then I made money on that, and then it went all the way up, and then I'm already out the trade. So let's see how much I made actually. I need to look. I made three trades and profitable, and all day was talking. That's funny. Let me see. Trade. All right, I made 300. I made $400. Nice.
Nice.
Yeah.
Okay.
So it actually shows right here. So right, mm, I got in. So I sold the first trade before you came in, the call.
Mm-hmm.
I got I put in a sell order at 25,534.
Right. Got you.
And then somebody bought that at 25,473. So I made the difference between these two numbers.
I see. Now, is there like some type of calculator or some type of so you don't have to do the math? Like it's just like boom, here it is.
Yeah, I don't
deposit
have to
this in
do
the
the
right
math.
bank.
It comes up automatically.
What do you mean?
Did you remember those numbers that were on the side of the screen?
Yeah.
That was telling me how much I was in profit. Like in the
Oh,
green means
okay.
I'm in profit, the red means I'm like losing money.
Got you. Okay. So, all right. Now, these indicators are basically suggestions, correct?
Sure, you could call it that.
So, I mean, if they're that accurate, why would you just not like, well, let me just dump the whole 150K in here and then sell it when it tells me to sell it and like not even worry about any of this.
Great question. Because these indicators are highly accurate, not perfect.
Right. Okay.
So um there's three realms of trading. There's strategy, psychology, and risk management.
But if it's giving you those if the indicator is telling you buy, sell, buy, sell, buy, sell, to me it seems like it would take the strategy out of it, the psychology out of it as well, because you don't have to think about it. It's just I'm just doing what this is telling me to do, and cool. But if it's highly accurate, right? We'll say it's accurate even 2/3 of the time. Okay, then I'm going to you would make like it seems like that there'd be a bigger reason to take bigger risks because if 2/3 of the time you're winning, baseball team wins 2/3 of their games, they've won over 100 games for the season. They're in first place. Like,
Right. Great question. So, it's highly accurate, it's not perfect, right? So it told me
yeah,
to sell here. So it's three parts
mm-hmm,
of and it's three parts of the equation. This can only take out the strategy part because you're not thinking about like, what if it does this? Like the thinking is gone, the
right,
psychology is left, and a person that will like because you're thinking of like way of sports, but that's not a right like way to compare it.
okay.
It's actually like calculated risk taking. So you can say it is as you can say it's a more sophisticated way of gambling. So like that's like saying if I have an 80% chance of spinning this roulette and 80% chance it's gonna go on green versus red,
Mm-hmm.
why not just keep betting that it's gonna go on green? Because eventually if you keep betting so high, that one loss is going to flip you off your psychology. So
So you're saying, so if I'm hearing you right, it's like, okay, you're 80% of the time it's coming up red on the roulette wheel. Okay. But you if you don't play it smart, even though you've won 80% of the time, the 20% of you losing, you're losing everything.
you're losing a lot because you're betting so heavy consistently.
Right. Got you. Okay. That makes sense.
Yeah.
Okay.
So you want more consistent like winning trades that are
Mm-hmm.
like I guess the same size versus like a lot of winning trades and a lot of heavy winning trades and a little bit of heavy losing trades because you're gonna feel like you're wasting your time. You're gonna be like, why am I doing this? If I'm making you're gonna be like, dude, that's actually the problem. Jeff, you're gonna be like
Yeah.
Jeff. And that's not how you trade. Like what he's doing is not like if that's I don't know if you're just condensing like him talking to you for like 2, 3 months, but within a month to wait be up a million and lose a million, that's not how you trade. He's doing what you just said.
Okay. I got you. All right. That makes
Yeah.
sense.
So the way you
So,
actually want to trade is consistent, gradual, like trending upwards.
right. I got you. That makes sense. So, would the goal initially be like, okay, so you invested $500 to get $150,000 worth of monopoly money, essentially.
Sure.
Um,
Mm.
and would the initial goal to be where you are um, to get to that $15,000 threshold so is that they continue to back you? Is that like kind of what the goal is? So is that you can do this with more consistency and be able to take more calculated, bigger risks and that type of thing down the line? Would that be like the idea?
I mean, yeah, that's cool to happen, but I'm here for money, bro.
Well, no, no,
Like,
no,
I
no.
want to
I get
make
that, but
my
well,
10%.
yeah, but if you're doing that, you're making money.
Exactly. So they're
Right.
simultaneous. Yeah, exactly.
Because my hunch would be that, okay, my hunch would be that if they're like, okay, you're good, we're going to keep backing you, right? And you buy more in, and like I said, you're at $1.5 million that you can work with instead of 150,000. My hunch would be is that you would probably, instead of doing two $25,000 contracts or whatever you said they were called, right? Maybe
Hmm.
now you do eight as opposed to two because you have more money to potentially lose. You could take somewhat bigger risks.
Right. So let me break that down to you as well too. I'll just make a course. Um, let me open. Oh, you can't see my screen. Let me share.
There he is. What's up, man?
Who's that?
Spencer.
Spence.
What's going on, bud?
What's up, bud? My good old Canadian friend.
Oh yeah,
I love Canadians, bro. I don't know why.
I'm not a fan myself, but
Uh,
that's okay. I get it.
um, he said, "I get it." See, like Americans, like "fuck you, Dale." He's like, "I get it," like. um. All right. So where's my pen? Um. I'm a Hey. So you're hopping in the middle, Spencer. I'm gonna answer this question for Dale, and then you can let me know what questions you have, or and I'll give you the gist of what's going on as well. Line, arrowhead, pen, image. Cool, Spence.
Sounds good.
Where's the Oh, here it is. Boom, boom, boom.
about to hit 25,000 subscribers on my YouTube channel.
Lit, bro.
Congrats.
Thank you.
So 150,000,
Yeah.
right? And then you gotta keep in mind this is a representation of those funds,
No,
right?
I understand. I get that.
So what that means is I can only lose $6,000 in this account.
Right.
So one of the two is gonna happen first. Either I'm down 6,000
Mm-hmm.
and or I'm up 15,000.
Right.
And this only cost me $500 of an investment.
Right. Mm-hmm.
So 182 is going to happen. So now you're thinking, how can I make sure I'm gonna keep swiping back just to make sure I'm not in the play. How can I make sure I hit this number versus that number? And then now what you have to learn is what's called risk management. Risk management answers that question. So what risk
I
management is, and is saying, what's my highest chance of hitting this number? And you have to say, well, I have to have a good strategy. So, like, a good strategy in today's world is 60% win rate. So,
mm-hmm.
we have an 80% win rate, right? So, that means that if I take 10 trades, 6% of them, 6 out of 10 of them are going to win,
Mm-hmm.
right? So, we're hoping that we could just keep taking consistent good trades so that until we hit this number. By
Right.
that math, we're going to do it. So risk management says that I have to organize my trade so that if I lost 10 trades straight, it's going to be this number. But guess what? According to my strategy, that'll never happen.
Mm-hmm.
So that's why we don't bet heavy. That's why we only go in with two contracts or to four contracts at a time. Um, because we're every contract, we're going to get stopped out at how much is it going to be? Five, so 60,000. 6,000 divided by 10 is 600. So so every trade I take, I'm actually only risking um where's my pen? Here it is. Every trade I take,
Mm-hmm.
I'm only risking $600 per trade,
Right.
right?
Mm-hmm.
And then remember we saw take profit one, take profit two, three, four.
Yeah.
So what this is right here, where it says get in on the trade, everything below this line, Spencer, means sell. Um,
Uh,
so I sell with 4 units, right? So I sold earlier and I made some money. I sold here. I Take
I
profit
don't think I'm
one.
seeing what you're talking about. I just see the whiteboard.
Oh, because thanks for letting me know. Back to meeting, share entire screen. Close, close. All right, cool. Now you see it.
Okay, yeah.
So everything below this red line here means sell.
Hmm.
So I sold here and then take profit one, take profit two, take profit three was hit, right? So
Okay,
I
okay,
had
I see, yeah.
I had 4 units. So I took a profit off right here, took another profit off right here, and I got out fully right here. So
Got
so
you.
um so what's important for you guys to know here? What happened? Where's my drawings? Oh, I guess disappeared. All right, so is this like big enough for you guys?
I mean, I could, yeah, it's fine for me.
So 150,000. Boom, boom, boom. 150. Boom. One, two, three. And then we can only lose 6,000. One, two, three. And we have to make 15,000. One, two, three. And every trade is $600 risk. 600. One, two. Now coming over here, right? So wow, that's what happened.
There they are.
Right,
All right.
exactly. How did I? Oh, it's because I'm using Zoom. Interesting. That's funny. Um, uh, and then share. Yeah, that's why. Okay, cool. Anyway, so 15, 1, 2, 3, boom, 1, 2.
I guess maybe I'm looking at this incorrectly. All right. But my question, or the way it seems to me, Daquan, is that you're kind of on a probationary period until you either hit 15K or you lose 6K. If you lose 6K, you're out. If you get the 15K, then you would seemingly be able to, they would feel more comfortable in like kind of extending your credit line, as it were. Like you give them another $500. Now, instead of $600, you could potentially lose 12, but your gains would be higher as well, right?
So so let me you're thinking of this right. You just let me say it from the top simpler now that you have like a base understanding. So to trade in the market, you need capital. You need the more capital you have, the more money you can make.
Right.
So now there's industry in the trading market that says, hey guys, we heard there's a lot of traders that want to make money, but you guys just don't have a starting capital. And to do futures, you need like at least $3,000. At least that's on the low side. But you can't really make a lot of good money until you're at 5,000,
Mm-hmm.
150 or things like that. So there's a industry that says, hey, we're going to create these things called simulated accounts. And a simulated account is something you can buy where you can earn your right to trade. And yes, you can spend even $100 to get a $50,000 account.
Mm-hmm.
But there is a catch. The catch is, and I didn't say this part before because there's a way around it. The catch is I spend $100 to get a $50,000 account. They don't
Mm-hmm.
just give you that cash up front like that. The catch is you have to pass what's called a challenge, which means that you have to be profitable. You have to make that 10% 2 times. So you have to like
Okay.
go from $50,000
Yeah.
account. So you have to make
Mm-hmm.
50,500, 50,500. Um, so once you make that, then they give you an actual simulated funded account. So you can actually make money and withdraw funds.
So that first, okay, that if you did $100, now does that extrapolate? If you did, you said you put 500 in. Is that what you had to do with
So
500
so
as
so
well?
what I did is I spent 500 for skipping the two stages.
I see.
So
Okay,
those two stages I don't have to do. So like when I hit when I make the $15,000 in profit, 90% of that is my capital. That's my
right.
money.
But
And
if
the
you did
one
the
the
$100,
wait, hold
you're
on. And to answer that other question you had,
yeah.
they're not, it's simulated funds. So it's not actual funds. It's a representation of that money in the
Yeah.
account.
Hmm.
And I don't go live yet. They're paying me out of their because I simulated pass, I'm not actually in the market. If I simulated pass, they're paying me from their bottom line, the trading company.
Hmm. Okay.
So instead of me making money from the market and saying I want to withdraw from the market, that's not what's happening yet. They're paying me from all the fees they get from the world of traders because most
Yeah.
traders can't figure this shit out and they're a very profitable company. So
Hmm.
they're paying me from that pool of money. After I get paid out two, three times, then they're gonna say, "Hey, you're the real deal. I'm gonna actually fund your account, and we have the same deal kept."
Okay. So at any point though,
Hmm.
so like we'll just say that not only have you hit $15,000, but you've hit $150,000. Okay. If you lose 6 grand, you're done.
While yeah, yeah. Like let's say I went my account went from 150,000 to 165,000, right?
Hmm.
And I took out 10 racks. So now my account's at 155,000 and I lose that $5,000 again. Yeah, like my account's blown. I keep the money I made, but then I gotta buy
Right.
a new $500 account.
I see. Okay. All right. Okay. I was looking at that or understanding that somewhat incorrectly. Okay. I get it now.
Okay. What did you think before?
I thought it was like once, like, like it was probationary kind of. So if you get $15,000, you're good forever. If you lose $6,000, well, wah, wah, start over. You know what I mean? So that's kind of the way that I was looking at it. But from what I'm hearing now is at any point, if you lose 6K, it's a wrap. Even if you made $1 million.
Yeah, if you can keep making money, but the account threshold cannot um go below 1,000 for 144,000. You can't go below that number.
Yeah, gotcha.
Yeah.
Okay. All right. I get it.
Yeah. You just can't hit that drawdown. You can make all the money in the world, you just can't go backwards.
I got you. All
That's
right.
the point. Yeah. Um, cool. So $600 is what I'm risking per trade. Um, and every risk to reward ratio is going to be 1 to 4. So $600 is how much I'm risking to make 2,400 per trade.
Okay.
So remember, it's gonna come over here, but just don't worry about that right now. Remember when I said these profit targets are were hit?
Hmm. Hmm.
This little space right here, where is it? Bear stop loss. So if I got in here, this little space, if it got above here, there should be a $600 loss. So I'm betting that the price is going to go down here before it goes up here.
Hmm.
In the event that happens, I'm keeping my $2,400. In the event this happens, I'm losing that $600.
I see.
So I got in here, boom, 4 contracts. I'm hoping that, and I sold, I'm hoping that it goes below. And as you can see right here, it did.
Hmm.
So to answer, and that answers the question of like, why don't I just put all the money in? Is because in the event, I put all the money in, I lose $5,000 in one go versus just the 600.
Yeah, I got you. Okay.
Because 8 out of 10 trades are going to win, but 2 out of 10 are going to lose, and you don't know which is going to lose.
Mhm.
So you want to follow the plan so that this will outweigh this over time.
Okay.
Cool. Um, yeah. So doing this is gonna help with psychology, and then the strategy is this indicator. So now I'm gonna explain the part that you missed so far. Um, Spencer.
Beauty.
So what do you know about trading?
I know that it's shares of a company. I know that it's publicly traded. I know that there's a bunch of different things, options and futures and whatever. I don't know exactly how futures and options work. I've heard of them. Um, yeah, I know a little bit. I do a little bit, but more just like retirement stuff, not like day trading stuff.
Okay, cool. So you haven't really day traded before.
Yeah.
All right. So the way this works is, let me start with this is what's called the NASDAQ. And the NASDAQ is a combination or index of the top 100 tech companies in the United States. This little movement thing here, can you see my screen pretty good?
Yep.
This little movement thing here, like where that line is called
Mm,
is what price is at. And price moves every single second.
mm.
And what we're doing is we're betting that the market will move in the direction we want to make money.
Okay.
Right before you came on, or actually earlier on, like at 9:45, I got in on a sell trade right here.
Okay.
The market went down and it hit price target one, price target two, all the way to price target three. I sold out and I made money.
Nice.
Yeah. And what this thing does right here, there's only three parts of trading to make money. I know it seems complicated, there's a lot going on. It's actually very simple when you boil it down to these three things. It's strategy, it's risk management, and then it's psychology. Strategy is really simple. Risk management is even simpler. Psychology probably is the trickiest part of all because we all want to make money. We all have greed. We all have things we're trying to do. And because it's so easy to make money in the market, we make it hard. So when most people start trading, they have this screen right here, which is just the bare bones, and there's no actual like said and done strategy of what to do. What this is
Yeah.
right here is an indicator. And this indicator removes 1/3 of the whole entire concept. It told me to sell, I sold, and then I got out right here actually, and I made money. So I'm just following this indicator because when it says sell, I can sell, and when it says get out, I get out, and I have a measured amount of loss each trade, and I have a unlimited amount of gain each trade,
Mm.
each day because I can trade as much as I want. Does that make sense so far?
Yep. Yeah.
Okay, cool. So there's three parts of training of trading. Strategy is taken out because all I'm doing right now, I've been trading for 7 years, and this is outperforming how I've been trading for 7 years. Um, I'm just following what it says to do, and this is all I worry about for the first third. The second third is what I explained on this screen, which is risk management. Risk management is very simple. Like literally, you want to risk um your risk to reward ratio is going to be 1 to 4, and you're going to risk 1% of your account. Now I know I have a $150,000 account, but I only have $6,000 of risk. So that means that because I can only risk $6,000, I need to make sure that I can take my full series of 10 trades. So $600, let me actually use this color. $600 is on the left side, because this is risk, and 2,000, back up, $2,400 is on the right side because this is gain. And now the strategy, right, is proven to work. The true number is 70 to 80%, but I said 80 because it's like easier math. Um, but it's proven to work 80%. So that means that if I stick to the strategy, I will make let me close this. I will make what's 24,000 times 8? Um,
Like
196,000 or 192,000, I think.
92. I trust you. 92? 92,000. One, two,
No, it'd be
three.
192.
192?
Yeah, would you
2,400.
say you said 24 times 8?
2,400
Oh,
times
2,400. My bad. I thought you
eight.
said 24,000.
It's 1920 19,200. Right? And then
yeah,
the other side is 600. So I should lose $1,200. We don't know if me losing $1,200 is, matter of fact, let me make it to 70% because actually that's not even bad either. So 2,400 times 7. 16,800. 800. And then this is gonna be 18. That means that following this indicator, I should lose $1,600 and I should make $16,800.
okay.
Let's say this indicator is like not the best shit in the world, and let's say it's not 80%, let's say it's 50%. The reason why this actually is what's the most important thing isn't the strategy, and it's not even the risk management. Honestly, it's just psychology. That's why it's last. But this is probably the biggest thing you can control that's gonna like help you like the most. Because let's say it's not 80%. Let's say it's bullshit and it's 50% chance is gonna win, like a head toss, like a flip of a coin is gonna win, right?
Mhm.
And now we have new numbers. Let's get rid of this. Let's get rid of this. 5 times 600 is 3,000. That's how much we lost. And 5 times 2,400 is 5 times 2,400 is 12,000. So even if this indicator is right only 50% of the time, I still made my money and I'm $3,000 shy. Actually, no. 12,000 minus 3,000 is 9,000. So after taking 10 trades, I'll still be up $9,000.
Okay.
So the reason why like this is the easiest and the hardest, this is actually the easiest part. The hardest part of psychology is because you don't know if you're going to lose the first 5 trades or you're going to win the first 5 trades. If you lose the first 5 trades, you're going to start changing what you're doing because you're going to believe it's not going to work. And then
Hmm.
you're going to miss out on the actual 5 trades you're supposed to win. And on the other side, if you make this $12,000 first, you got to control your psychology still again, because now when you start losing the other 5, you're gonna be like, oh my God, I'm giving back to the market. I'm losing my capital. And you're thinking you're supposed to make this, and it's a perfect world. In a perfect world, you would make that. Um, what actually happens is you end up making this like a lot more. So this is the actual goal, but this one of the you just never know which number you're gonna hit first. So that's why I want to control your psychology. But this is basically trading in a nutshell. Go ahead, Dale.
So why are you, two questions.
Hmm.
Why are you doing futures versus I don't know, crypto or something else? And why are you doing it on the minute versus hourly?
Great question. Because I am doing this on easy mode. I gave up trying to be a consistently profitable trader. I've been a profitable trader. I've made $10,000 and all this stuff, but I'd be like Jeff. I'd give it back the week later, and that's not sustainable. So I met the owner who created this Quantum Flow, and he's
Mhm.
proven it to me. Like it works. People have gotten paid out from this successfully.
So
And
basically, that's what Kelby's doing. Is futures.
yeah, but
Okay.
and not even just that, but yeah, yeah. I mean, I could do whatever I want. Like I
Now,
could
of
trade
course you
anything.
could, but
Yeah, yeah, yeah.
you
I could
have
do
options
hourly. I
there.
could do
That's why I'm
full
asking why
hourly.
you're picking that option.
I'm picking this option because it's the easiest, and this indicator works for this symbol the best. It's
Okay,
proven
that
it's the
now,
most
all right, that
profitability.
makes sense. And
Yeah, most profitable.
is that the same? Uh, is that the same reasoning for doing it? Doing on the minute versus hourly, or
So, you're thinking about minute versus I missed this trade, but it's fine. Um, rather talk to you guys. Let me get rid of this and then no, I want to hit this. Delete all. All right, cool. So the minute versus hourly, um, I'm not doing anything. Like the minute versus hourly is a strategy question, right? So like this indicator puts all that into perspective. Like I can
okay,
explain Midnight Open, New York Open, Asian Open, like all that is honestly relevant. Like you learning that is getting into the weeds of like
all right, I get you,
yeah,
I
yeah.
get you.
But
Okay,
but but it puts all that into account. I can look on the 1 hour chart, right? But it's not going to work
hmm
because people are going to start trying to trade on their own. So it actually shuts off, which is really good. You're not even going to see what's going on. This is the hour chart.
so
If
it
you
won't
keep
even give you the indicator.
it won't, and it's good because people will try to trade
All
like
right,
that.
that makes
Yeah.
sense. Now I understand.
It's a system that tries to like not let you trick yourself.
Yeah, I got
Um,
you.
yeah, yeah. So it
So
only
you
works
said you
like that.
lost out on that trade. Where did the indicator tell you to do that? So I don't see that.
Yeah, so you see where my mouse is right here?
Yeah,
This is where we were talking like 5 minutes before Spencer came in, and I would
yeah,
have gotten in on this trade right here again. I decided not to, and I said I missed out on this trade because look where price is at right now.
yeah. I
See
got you.
how it ran back again?
Yeah, but I don't see where it says buy right there. I see where it says buy up top,
So you see where
but
it
I don't
says
see where it
sell?
says buy right
You see where it says
above
sell
that
right now?
line. Hmm.
You see where it says sell? So
Yeah.
if it's supposed to say sell every time it goes below this line.
Okay.
But
So is
the
that
reason
little
I
arrow?
say
That
that
little
again.
arrow is considered sell?
No, the arrow is where I got in my trade. You see like this little red box right here?
Oh, so you missed selling. You didn't miss buying. Is that what I'm hearing?
Um, no, like you see where it says buy right here, guys? You see this?
Yeah. Hmm.
This was like 8 a.m.
Right.
Sorry, this was 9:10 a.m. So like the market wasn't even like open. I didn't get in here. But
Hmm.
this is 9:46 a.m., right?
Hmm.
So I sold here right before you got here and I got out at 10 a.m.
Right.
But now we traded up in this range. I don't trade. Below this line, I do trade because this everything below this line I hit sell for. Everything above this line
Hmm.
I hit buy. So I said I missed out on this sell because when we dipped below right here, I got in again and I made more money. And then I
Okay.
got out right here. But then guess what? We came back up to this box and then I could have hit sell, but I decided not to. Um,
Okay.
so that's why I said I missed money because I actually went back
So
down.
how many more contracts do you have that you can sell?
I'm I I can so with this account I can sell I can use up to 10 contracts. One like if I'm in a trade and I'm using five
Yeah.
contracts, I have five
Hmm.
left. But I got
Okay.
out of my trade, so now I have all 10 again.
Oh, I see. Because you sold them.
Yeah,
So
I
you
got
got
them
the
back.
all right. Okay. I get it now. All right.
So what is the ratio? It's like what is the money leveraged at? Because like hypothetically, let's say like I buy a contract and then my internet shits out and then I have this contract and it drops to the floor to zero. What is what is the maximum loss I could take?
So the maximum loss you could take is up to you. You have to do what's called a a, a stop a stop limit or a
Yeah.
yeah, you know what that is. Stop loss. There we go. So let's rewind back time. Actually, what does this do? Is that it? Where's the rewind button? There, bar replay. Beautiful. Continue. We say the last part. Continue. Oh, no. Start new. Let me. All right, here we go. Wonderful, wonderful. So I'll actually, what I'm doing is I'm rewinding back time to show you guys what I did. I can't do it. I'll do that tomorrow. All right. So to answer your question, is you see where this wick is right here at the top?
Mhm.
Let's say I got in and I put in a sell order right here. Can I see? Ah, there we go. I don't want four though. I want two. Non-tradable symbol. MNQ. Boom. So select a bar to trade. Mhm. All right, cool. There we go. Let's say I put in a sell order right here, right? And the market hits this, and I get in. I get like sold at this spot. I will put what's called a stop loss. So you see this thing right here?
Yeah.
I would drag my stop loss right here. Boom. So and then I'll put my take profit right. Um, let me see, 150. Uh, boom, right there. Remember what I was saying 1 to 4?
One more question, just so are we shorting? Because we're selling when it goes down and buying when it goes up. So this shorting, or is this thing inverted?
This is shorting.
Okay, this is shorting. Okay.
Yeah. Um,
We had a whole half-hour conversation about this before you got on, man. I could not wrap my head around it, but we finally got it figured out.
do you
No,
know
I
how
somewhat
shorting?
understand. I know what shorting is.
Oh, cool.
I just didn't I wasn't aware. I was like, what the fuck is
Yeah. So, selling is shorting, and then buying is buying. Yes. So we are selling. We're shorting.
okay, cool.
Yeah. And to recap what I was saying before, I will get one contract, and I said it's a risk to reward of four. I'm of 1 to 4, right? So so I'm risking $50 to make. Actually, that's not even four. Four would be 200. So it would close right there. I'm risking $50 to make $200. That's 1 to 4. But now I said for my size account, I can risk $600 per trade. So I would change from one contract to, I think what, six. Is that eight? Let's see if that's eight. No, that'll be like nine. Let's call it eight. Yeah, it is eight. It'd be eight. So I'd risk, um, it would be 10, $600. Yeah, let's call it 12. I'd risk 12 contracts right here. I'd risk $500 to make 2,502. So right here, if I had gotten on that trade instead of if I had gotten on this trade again, I would have risked 500 and market went down, so I would have made $2,000.
Okay.
Yeah.
Yeah, okay. But there's a potential. I don't I remember talking to a friend about some options or whatever like that. But there's a potential to lose unlimited amounts of money, right? Because it's shorting and you're
No.
leveraged.
So when you come here, you have to like, well, I don't want to say you have to erase what you thought because it's probably better you don't. So anything you trade, well, no, anything you trade, you only lose or risk what you put in. But when you short the market, you technically can get a margin call where you have to pay back extra, but this isn't option, this isn't naked puts. This isn't naked options trading. This is futures.
Okay.
So you can only lose what's in the account. But going back to the beginning explanation is I have what's called a simulated prop firm account. So I paid $500 for the opportunity to make money using their leverage. So $500 bought me a simulated um futures account where I have the representation of $150,000.
Okay.
My goal is to make 10% of this account, which is 15,000, before I lose $6,000 of the account. In the event in the event I lose $6,000 of this account and it goes from 150 to 144, my $500 I pay for this account is already gone. I don't get that back. In the event um, I make 10% of this account and it goes up to 165,000, I keep 90% of that amount.
90% of the 150,000.
90% of the profit.
Okay. Okay.
So the 13,800, I think was the number, Dale.
Mhm.
That's what I pocket. So I'm risking $500 to make 13,000.
Okay, but if you lose all that money, then it's a simulated account, so it's not actually real money, and they're testing you. Okay, I got that part. Got it.
Yeah.
Okay. Okay.
So that's the first understanding is like what are we doing? This is a simulated funded account. The second understanding is how we do it, which is understanding the three fundamentals of trading. It's all you really need to know is strategy, risk management, psychology. Psychology is don't get greedy, don't be a bitch for right now. It's all the study I can give you on that for right now. Risk management, I feel like I did a very good job covering. It's just 1 to 4, and that's how you're gonna do it. Just use this little bar thing I showed you. You're gonna risk 1% of your account to make 4% return. Um, to make 4% of your account, and then the strategy part you skipped out on, and I think Dale could hear again too, is very simple. All this what's going on in the market doesn't matter anymore. All you do is if the market says buy, you buy, and if the market says sell, you sell. There's times where the profit mark the market marker goes down to 10, doesn't even matter. You don't need it. I usually it has a higher rate of going to 4. Um, so I would just do that. The only other thing I didn't say is once you make money, you should never lose money. So what that means is, remember when I was showing earlier where it went down to 2?
Mhm.
Once it goes down to 2, remember what you were saying earlier with the stop loss, Spencer?
Yeah.
I move my stop loss from right here to break even, so that now I'm only gonna make money from this trade.
Yeah. Okay. That makes sense.
So yeah, I get in, I'm waiting for profit. And once it hits my profit, I put it to break even and I just wait for it to be done. And then that's it. And to answer the other question, this process should take anywhere from 15 minutes to 2 hours. When this happened at 9:45, I got in and then I got out right here at 10 p.m. at 10 a.m. Boom.
Okay.
So you can't cash out until you've gotten that to that 10%.
Yes.
Like
Well,
you like what you've made
on
today,
on
you
on
cannot cash out.
on this account, I can cash out at $9,000. And that's what I'm gonna do. Like once I hit 9,000, I'm gonna aim for 10. I'm gonna aim for 15,000. Once I hit 9,000, I'm cashing out. and cash out's
Okay.
the same day.
Right. But my point is that until
I
you
can't
get,
take out like no, could no. I have to hit that amount. Yes.
yeah, okay, that's what all right. It's not a question of if you should. I'm just asking if you even can. All
No.
right.
The I can't. After I make that first $9,000 threshold, I
Hmm.
can take out anything above $200 daily.
Okay. Got you. All right.
Yeah.
Okay. Have you gotten to that 15,000 mark?
I just started.
Like today?
Like uh what? Yeah. No, yesterday. No, Monday, my bad. I started Monday. This
Oh,
is a
for
fresh
real?
new account. This account started yesterday, but I
Uh-huh.
started on Monday on a different account.
Okay. Gotcha.
Yeah.
All right. Okay.
Interesting.
All right.
Yeah.
Then how much are you up?
Right. So yesterday was a losing day. I lost I lost my psychology. I got out of it. I was upset. I lost my 600 and I went back in when I wasn't supposed to. So I lost 1,000. And today I made 450. So I'm right now my account's at 145,000 dollars. So at 500 more dollars, I'm at break even.
Okay. Gotcha.
Yeah. And that total is right here at the bottom of the screen. 149,450 actually.
Okay.
Yeah.
All right. Okay. How long do you anticipate it'll take you to get up to that 15K?
Um, I don't know, month.
Okay. All right. Makes sense.
Yeah.
All right. Is there a better time of the day to be trading than others?
9 a.m. to 3 is like the most volatile, the most movement. There's no window specifically between then. Um, there's time, there's windows of the when the market moves between the market's open from 9 to 4. But
Okay.
there's windows between where the market moves between 9 to 3, but the windows change. It can happen at any minute according to the setup.
Yeah. So
Um,
once Nasdaq closes for the day, this is done.
Futures trades 23 hours of the day. It takes a break at 5 to 6, but there's
Oh.
always movement.
Oh, okay. All right. Gotcha.
Yeah, yeah.
Okay.
You can trade them when the market's closed, or is just using other markets?
Futures. So the stock market closes at 4. Um, and futures is 23 hours out the day. Futures is almost like Forex. Um, it's pretty close to Forex actually, because Forex is 23 hours as well. But yeah, futures has the same hours as Forex. So it's 23 hours out the day. Closed on
Okay.
Saturdays, opens at Sunday at 6 p.m. and it closes on Friday at 5 p.m.
Can you post where to download this the chart?
Yeah, on your laptop, download TradingView. I'll send you the link.
Yeah.
Or
Okay.
you could, yeah, just you should download Trading. Let me
And
send you.
how did you put Kelby's indicator on there? Like it was a separate download or
Yeah,
something?
I bought
Okay.
it.
All right.
What kind of computer do you have?
Uh Asus.
What
Asus.
the fuck? Oh, jeez.
Are you laughing at that?
No, 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 no. I just realized
He's laughing at you,
I,
Dale.
no, 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 not you. I opened my Instagram and my fucking trying to set up a planner for my fucking posting thing, and it just posted it randomly. And I for the podcast, I was setting up a scheduler, and it started just posting all my posts randomly. So now I have to go fix that.
It's funny.
For fuck's sake. Okay, I'm I'm gonna go fix that. But I appreciate you telling me about this, and I will take a look at it for sure. And appreciate the time.
Okay, cool. See you around.
See you around, bud.
Peace.
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 Okay, so all right, so I got to get with Kelby to get the indicator, I guess, because I'm not quite sure how you do that, but um he gave me access to everything, so I should be able to just, I guess, just is it like a separate download and it just kind of integrates or something?
Yeah, you gotta add it on this. You gotta
I
it's
see.
just like 3 clicks of a button.
Okay.
Once you get it, you just go to indicator and you add it there.
Yeah. Okay. Yeah, I'm gonna link up with him next month. I'll be in Vegas, so already talked to him about that. So be linking up with him, and
Nice.
yeah,
What's
it
the
seems
plan
pretty
for this?
dope, man. I wish he would see. I told him, I'm like, bro, I have no idea where to start. Like your onboarding process needs work. Like that, like I have no idea where to even go, what to do. And he was like, yeah, that's something I need to work on. I'm like, yes, you do.
Yeah.
Okay. This makes things a little way, 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 way easier.
What makes things easier?
No, just that you explained it. That's all.
Oh, yeah, I'm happy. Yeah, that's what my
I
goal
mean,
is.
there's functionality questions, but I'll get to those once I start playing around with this, So
Good. All right, cool. So I'm gonna enter this trade. In on 4 contracts. Let me just take a
now
look at
can you automatically set it to where it like okay, this well go ahead and do your thing, man.
I'm listening.
So okay, so you got it like where you got those four cells, right? One, two, three, four. Now why didn't once it said sell, why didn't you just sell all four right then, as opposed to kind of waiting it out and selling one at a time?
I did sell all four at once. I only clicked one button.
Okay, maybe I'm misunderstanding that chart then. All right. The one, two, three, four,
Where'd you see that?
the purple, where it
Oh,
says
okay,
sell
okay,
underneath that.
okay. So this is price. You see this
Uh-huh.
that see this that's here now that wasn't there before?
Yeah.
This actually is telling me what my order is. So I got in on -4, so I sold 4 contracts. If it's
Okay.
+4, I bought four. This
All
is my
right.
fluctuating profit or loss statement.
Okay.
This is the markers. So profit one, profit two, profit three, profit. Remember I said risk to reward ratio?
Mm-hmm.
My stop loss is a risk to reward of 1. My take profit should be 4. So this should be 1. It's a recommended 1 to 4. So it's saying
Okay.
like if it went down on and it hit 4 target profits, these are the markers. So this is set up generative by like the algo.
Okay. So you're up six or well, 56, 66. Like
Yeah,
if you cash out right now, that's what you would make.
yeah,
Okay.
exactly.
Now, can you just have it set up where automatically just when it hits that line of sell, it just does
Yep.
it for you? Like you could get up, walk away from the
So
computer,
here
and
it says
it just kind of
buy.
does it on its own.
C says buy MNQ at this price.
Mm-hmm.
So and I hit buy. I just set a buy order to get out the market at all four at this price point. And I can sell it for one, two, three, and four.
But it already says sell. Why wouldn't you just sell it now?
What's that sell?
Yeah.
This So this is set up chronologically in time. So like 9:46, 9:47, 9:48,
Right.
9:49, 10,
Yep. Mm-hmm.
so right now. This was at 9:45. So
Right.
this occurred already. I was told to get to sell here and then
Yeah. No,
basically
I get that. But that sell line goes across the
Yes,
breadth of the chart.
exactly. Yes,
So
exactly.
anytime it goes below that line, the idea would be to sell, correct?
Correct.
Okay. So I'm saying it's below that line. Why wouldn't you just sell right now?
You see this?
Yeah.
This means I'm currently in a trade, and this is my fluctuating profit margin. Right. So I sold when I said, "Oh fuck, I'm gonna get in."
Yeah.
And then when I got in at this, you see where it crosses this tick arrow right here?
Uh-huh.
That's where I got in at. So right now I'm in profit because I took those Pokemon cards right here, and right now
Yep.
that's the current price of the market. So I
Right.
already
I get
sold.
that.
I sold
Oh,
already.
okay. I get you. I
I'm
get you.
showing you that I sold. That I told you that I sold. Now I'm showing you because like this is the proof right here.
So hmm,
Go on.
no,
You
I'm
have any
thinking.
questions? Yeah.
So why would you not stop your trade right now?
Because of everything I told you on this screen. I know that if this worked 50% of the time, I will have $9,000.
Right. Okay.
So if I sell now, it's because I'm either greedy, fearful, or not listening to the plan. See
Well,
how
how
it's
do you know
going
when to
down?
get out? You know, okay, you sold, but how do you know when to get out of this trade?
Either I feel like things are going to change where it's going to go back up, or it hits my profit target, or it hits my stop loss.
Okay.
So right now it's at, remember you said, well, why don't you just sell? It was at 220,
Hmm.
right? I could sell now if I'm like, it's gonna go up, or like, oh, I gotta leave or whatever. But
Yeah.
if I dedicated to making this money, hits the profit target three, I'm happy. Like I'm good for the day.
So those are profit targets, the purple lines.
Yes.
Ah, I get it. Okay, I was confused as to what that. All right, as to what that was. All right, I get it now. All right. Now, if you saw it starting to go back up, would you be out?
Um, if I so you see how when I said it is about to hit two,
Yeah.
I put my stop loss at break even in case it goes back up so I don't lose money. So right now, because I have my stop loss here, I don't
Hmm.
move it. And I'm either going to make this amount of money or it's going to hit my stop loss and I break even again.
Okay.
Yeah.
All right.
So if it hits here, we are in the clear. And our boy Spencer hopped off at the best time. That would be nice. I don't know if it's gonna hit here though, because it's such a rangy day. Like, see what's like, see how we like stayed right here?
Yeah.
This normally doesn't, I can't even say that anymore. This happens 2 to 3 times out the week. Um, but as you can see, like, so today's like technically worst case scenario, but we're still making money following this indicator.
Yeah.
So
So
like, hmm
now you got four contracts on this, right?
correct.
Okay. Now your profit that is showing on the ticker. Now is that times four or is that in totality?
That's totality.
Okay. All right.
Oh man, that's a price target three. It's funny because technically, right, according to what I was teaching just now, I was supposed to I think it's gonna come out right here. I'm just take this. I'm just gonna take this. Um Psychologically I need that. I'll tell you why in a second. But technically I was supposed to getting on 12, right?
Mm-hmm.
Because of the risk reward, right? $600 risk per trade, da 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 da. Um but I only got four because my risk changed, so I can't really risk $600. So I only did four because, and I had to manage other stuff like talk to you guys, and I wanted like psychology is the most important part, like I keep saying. So a lot of things you're
Yeah.
gonna see. That's the only thing that's hard to control, like us movable. But I gotta know four, and the reason why I took my profit just now is
Mhm.
because now if I didn't take a trade today, I guess I'm almost there, whatever. You see this number right here?
Yeah.
I'm just close to break even at 150. So technically now, right? I'm not gonna like bitch about a tick. I'm not gonna be a dick about a tick. So like $50, like that's like a tick, that's like whatever. So right
Yeah.
now I'm at break even. Now I can, especially, oh, maybe I should have held. Oh, look at that. Now I can trade regular. Now I can actually do what I was saying, where it's like risking $600 to make $2,400.
Yeah. I got you.
So psychologically I wanted to do that. Also, you see how like we hit this line twice?
Hmm.
So I'm gonna teach you something that's like within the strategy realm. Today's was called a rangy day, and I'm gonna teach you something even like a little bit more sophisticated. You see this price? See, yours is 1591.
Yeah.
This is the VIX. Long story short, if this VIX is above, let me move you out the way. If it's above 16 and a half or 17, if it's up here, that
Yeah.
means it's a great day to trade because it's volatility, right?
Okay.
But guess what? It's low right now. It's at 15.8, $15, 15.8. So like it's not we're not gonna go anywhere. So what that tells me is that plus the fact that see it's bouncing. Look at that. Plus the fact that we bounced off this price twice before. History
Hmm.
doesn't repeat itself. It tends to rhyme, right? We bounced here, bounced here, bounced here, and we're bouncing again. So I didn't think it was likely that we go down here.
Hmm.
Okay. But that's just extra knowledge. But anyway, yeah. So now that I'm at break even, um, let's say tomorrow comes, I can do the 600 to 2,400. And as you can see, um, if I risk $600 here to make 2,400, I would have
Yeah.
probably gotten out like right here, and I would have made like $1,800 towards the
Right.
15,000 I have to make. And that's pretty much what happened. And I would say you need I'd say about 10 trades to become profitable. Ten winning trades. If you get 10 winning trades, then you get your payout. And I think a month is more than enough time to for that to occur, as long as the
Hmm.
psychology remains intact.
Yeah. I got you.
Yeah.
Okay. All right.
But yeah, that's pretty much it. Like,
Okay.
um, tomorrow will be a different day. I'm gonna go shoot some videos because honestly, that was my goal. Like, I wanted to break above even, but I think I'm gonna come back at like one, maybe two to see if anything has changed.
Yeah.
But yeah, I made nine. How much did I make? I made $900 today, bro. That's a good day. Let me go right here and show you the thing.
Well, sorta. You made $900, right? I mean, you're back up to par essentially.
Yeah, yeah. I'm not out red, right? But like if I was like at even, right? If this was yesterday or
Yeah.
whatever, I'd be up $900. But $900 was made in profit, but now I have to get break above that count for sure.
Yeah. I got you.
Definitely.
Okay.
Um yeah, cool. So yes, this is pretty much it. I'm gonna go live again tomorrow. I don't think I'm gonna trade again today. I might if like something else occurs.
Yeah.
But I doubt it. I don't think nothing's gonna happen today.
Okay. All right.
Yeah, even on a choppy day like this, we made money. So this is pretty good.
All right. All right. Yeah. Send me that link
I
for
texted it to
this
you.
and I'll get with Kelby so I can install that uh um what you call it? Indicator.
Yeah,
Okay.
cool.
Word up. All right. Well, I appreciate it, man. Thank you.
Yeah, for sure, bro. Thanks for tuning in.
All right. I'll talk to you.
All right, peace.
All right. Peace.